Hey everybody, welcome on back to Chart Request Live. My name is Patrick Dunawilla. I am the editor of the Chart Reports, and I'll be your host today. Joining me is Sam Gatlin. Sam, how we doing?
I'm doing good, Patrick. I heard you went to a New York Rangers game last night. How was
That's
it?
right. That's right. It was a blast. They didn't win. They lost in overtime to the Washington Capitals, but it was still a great game. Hadn't been to an NHL game in forever, and it was great hanging out with JC and Jay Woods, and of course Rick. So it was a fun time.
For sure.
Nobody
Did you
got
paint
hurt.
your chest or anything?
Yeah,
Were you
painted
one
my
of those
face
fans?
red and blue. The whole get up.
Sounds like
So how
fun.
about this market, man? We got a pretty bipolar market this week. It's been like, we started off with Monday was down at least 1%. Tuesday was down at least 1%. Wednesday, yesterday, we got a little bit of a reprieve, up 1%, and then here we are, down 1% at the lows of the week here. So what do you think?
Yeah, for me, I've been watching this FX market pretty closely. We've been talking about the offsides positioning and the COT for the euro specifically, but also it's across the board in the foreign exchange markets. The speculators, the dumbest money on planet Earth, have been betting on a stronger dollar, and they have been dead wrong. And that extreme positioning is being unwound in a serious way. You can see these last few days in the euro, and it's Thursday at noon, so there's still a lot of time left in this week. But if the week closed here, this would be the best week for the euro US dollar pair since March of 2009,
Whoa. And
when
of course,
the
that's a
great
huge
financial
part of
crisis
the,
was bottoming out.
yeah, it's a huge part of the dollar index as well, right?
For
Up
sure.
there with the
It's over
yen.
50%.
Yeah. So and you're seeing dollar down for the third, fourth day, something like that. And yet stocks still getting blasted. Yep.
Yeah, here's the US dollar index. This is what you're talking about here. So we tried to break out of this range, failed miserably. It looks an awful lot like that euro US dollar chart. But here you are trading at the same level you were back in November, right at the
How we doing
election.
for the week as far as the dollar? Is that like the worst? That must be like the worst week in a minute, right?
Yeah, let's throw up a rate of change.
I mean, you said best for the euro in how long?
Since March of 2009.
Oh, wow.
Yeah. So it's not as extreme when you look at the Dixie. It's the worst week since November 2022.
Wow.
Any way you slice it, though, like this is a pretty extreme move. And typically, when you see the dollar getting slammed, you see risk appetite increase in the markets, and we've seen the exact opposite.
Right. Here we are, S&P worst week since September, if it closed here.
And here
So,
you have Bitcoin resolving a top, failing to get back above that level. I know Steve's out there buying puts for his breakout multiplier strategy. I think that makes an awful lot of sense. You know, you saw this big pump on Sunday. We were here talking to you about it on Monday when we were giving that all back. And here you are, still below that level. So, this is one of the greatest risk appetite signals in the market, and to see it acting this way in the context of a very weak dollar really does not speak well to the bulls.
well, Sam, let's dive right into it. I see Wavy in the chat, and I see Mr. Zerby. What's up? Go ahead and drop your tickers in there if you want. But we'll start with the mailbag as always. We got Kareem in the mailbag asking us about Mara is a short
Yeah.
for the next 3 to 6 months. Or no, I'm sorry. He says he's currently short. Looking, his time frame is 3 to 6 months. What price levels should I be watching out for?
Yeah, I don't hate that at all. So here's Mara relative to Bitcoin, resolving a big distribution pattern. You're at the lowest level since November 2020. And you can look at Mara relative to the Bitcoin miner ETF, and you can see it's not really a leader or a laggard. It's just a market performer. So I think there are better vehicles for a short, potentially. But nonetheless, this stock sucks. It's below a lot of key levels. Particularly, I have the VWAP dropped from this November 2021 peak, and you can see that was resistance right here, and then it was flipped into support numerous occasions, and now you've decisively broken below that. So I think that is an interesting place to initiate some short positions. But if you want to be more tactical with it, I think you could look at this low right here. So that is the September 6th candlestick. If you want to short this one on weakness, I think that would make a lot of sense. So you failed to close. Well, you did close below it 2 days on November 25th and 26th, and then you quickly scooped back above there. This could just end up being some type of bear flag, little consolidation, continuation pattern in the context of a bigger downtrend. So it could look something like this, a little last gasp for air before you get crushed. And ultimately, I think this one could easily end up down towards this October low. And like that's around 7.5. And this breakdown level is about 13, so that's like 50% downside. And you know these can move very fast, so I think that could happen within 1 to 3 months. Of course, this is all going to be dependent on Bitcoin. If Bitcoin's scooping and scoring back above 90, all bets are off here. But if Bitcoin is in fact resolving that top and trending lower towards that 70,000 level, then this could be a fantastic short.
Yeah. We got another short here.
I love it.
Looking to short Shopify.
Cool.
6-month time frame.
Cool.
And also looking for levels here. This one also comes from Kareem.
When was the last time we were looking at short trades on the chart request live?
Yeah, I was gonna say, man, it's been a while since we had 2 right in a row here. Of course, from the same person, so.
Cool. So this is the level that stands out to me from a very tactical standpoint. This would resolve a very short-term top in the Shopify. It would look something like
Pretty
this.
clean level, right?
For sure, it's very clean. You can just call it 100, a nice round number. From there, you're probably going to this earnings gap level from November 12th when they beat top and bottom line and rallied 21% in a single day. So I think that could happen in a matter of, God, I want to say just like one candlestick. Like it could happen really fast. So
where do you throw in the towel on a short like this?
So I think you definitely don't want to own it, or you don't want to be short. If this one reclaims this view up from the all-time high, it comes in around 113.5. Really, I wouldn't give it that much of a leash. I would only short this one on weakness below this $100 level. And if it closed above that level, I would unwind everything. Hopefully it's not too far above that level, but that is the risk you're assuming with a trade like this. And this one, if in fact we are entering a bear market, like this is a pretty good vehicle. Like this one got absolutely hammered in the last bear market.
Right, and never was able to really recover.
Yeah.
And even on that last high, Sam, in February, I mean, it did make a multi-year high, but RSI couldn't even get oversold on that one. So you didn't get that confirmation.
Gross RSI. Let me pull up my better RSI.
Yeah.
There we go. So you're looking at daily RSI. Yeah, Patrick, that's a great point. And that's exactly what you want to look for if you're trying to trade like a failed breakout pattern, which is kind of, I think that's the move right now, is like it's not so much these breakdowns are really working, but it's really the breakouts aren't working. You want to
Right.
be looking for more mean reverting strategies. And right here, when it was trying to break out and momentum was not making new highs, that was your signal to get short. You could have shorted this February 21st candle when it went back in the box, and you could have shorted it all the way back down to the bottom of this range. That's 15 points in a matter of a week. Like, that's a pretty sweet trade.
Yeah. Yeah. I see what you're saying. Like that would have been the short right there. A
Right,
little late to it, but that would have been like the best risk reward right there. Yeah.
for sure.
Because that would
No,
have
I
showed
like
you
this one
the
short
fill the
though. Like,
gap.
this is the kind of vehicle you want to look for. Like, if the world's gonna end, you want something that has a lot of exposure to the consumer, like Shopify does.
All right, you ready for a long setup?
Yeah, let's look at it.
All right. So this one, I think it's a Chinese name. I gotta look here. Huya.
The Huya.
Huya. Yep. Guangzhou, China, headquartered. And China, man, wow, it has held up really well throughout what's been going on, the sell-off in the US here.
Absolutely, it has. It's been very impressive. And it's impossible
And
to ignore,
yeah,
frankly.
this earlier today I was looking at CQQ versus QQQ, so just China tech versus US tech. It's an interesting looking ratio there. I see someone in the chat asking about CQQ.
Yeah, I love that you bring that up, Patrick. This is a pretty textbook bearish to bullish trend reversal pattern. You've just been chopping around here for a year now, and here you are trying to climb out of this basing pattern with this God candle this week. You've gotten about 13% of outperformance from Chinese tech relative to the United States tech. That is something I want to be involved in, for sure. And if you look at Huya relative to, let's just use the CQQ. So this is not really an outperformer. I want to say this is more of an underperformer, a laggard, relative to the broader Chinese equity complex. You can see it's trying to work out some type of reversal pattern here, but it's pretty messy. I don't love that from a relative standpoint. And if you look at it in absolute terms as well, the Huya is pretty sloppy and messy. I don't think there's really anything to do here until it
Let me ask you about the Tuya. Would you rather be in the Tuya?
Tuya. Is that a thing?
It's a thing.
They got the Tuya and the Huya.
Yeah.
Yes, this is something I would be interested in owning. This has already resolved that pattern. And let's do Tuya
It's
relative to Huya.
this one is also a Chinese tech name.
I love it. You
2
can see
billion.
Tuya is a big time outperformer relative to the Huya.
So the Tuya over the Huya.
Yeah.
Gotcha.
I love it.
Oh man.
And you have a super actionable level. Like, you're right there at the breakout level. Today, like 340 is the level. And if you're above there, I think this one's on its way to 27, that all-time high level. That's over 600, almost 700% more upside from current levels. So I like that a lot. That's very attractive.
Yeah. So the Tuya over the Huya. You heard it here first.
I
Let's
love
move
these
on
Chinese
to
tech.
Nike.
Tech B, which is kind of okay, but
So yeah, let's hit Disney. Or I'm sorry,
Disney,
Nike. Nike, yeah.
Nike.
Nike or Disney. He asked about both, so we can hit whichever one you want first.
Uh, yeah, that's a tough one. These are both. I like to call these investor patterns. These are
And similar blue chip names, right?
for sure. This is not something I would ever touch in a million years. I know if like Straza's been taking some swings at these. And like that's cool, but I think with these trades, he has a much longer time frame, and I think that's really what's
Yeah.
required here, because what you have is a very steep drawdown from this November 2021 peak. It's fallen over 60%, and here it is at the same level it was back in, let's see, 2018. So this one has been a complete mess. I think the bet here is it's not a giant top, and buyers are going to dig in here and eventually work this one higher back towards this 176 level. But that's going to take a lot of time. Like, I think
Yeah.
what you're looking at here is potentially 150% upside, and I don't think it happens within 24 months. Like, I think it takes at least that much time, because this has been a almost 4-year drawdown at this point. So I think it could very easily take 4 years to get back to that peak. That's how I see it, at least. And Disney's a very similar story. You have a giant, just gross range here, and I think the bet it's an even larger, not a top formation. You have a super well-defined level of interest here at $90. If it's above there, it's likely to get back towards this $200 level, but once again, you're talking about 100% in a matter of years, when you can get 600% in the Tuya and a much shorter time frame. So it's just a trade-off thing. It's not something I'm interested in, for sure.
Yeah, I mean that base just doesn't want to resolve higher, right? I mean that's a
No,
nice looking base, but if it starts making new lows there, man, I mean when bullish patterns don't resolve higher, that's no bueno.
for sure. This one has been a relative underperformer too. I think this one's at like the same level it was back in 2000, or yeah, I mean, look at this relative trend. Like, is this something you want to buy? For me, no. I wouldn't ever touch this. This is at the same level it was back when the dot-com bubble peaked. So it's pretty gross. It's fallen, let's see, over 70% relative to the S&P 500 since it peaked in 2015.
Ooh.
Yeah, that's pretty gross. This is something
So
I would be looking to short.
I was gonna say I'm not familiar with this name, but I just pulled it up and I've marked it up, so I guess I've looked at it at some point. But CLBT is the ticker. It's a package software name, 3.5 billion. Looks like they might Israeli name.
Hey, Israel. So
Yeah.
let's look at it relative to Israel, which
Hey,
is
what's that ARK Israel ETF?
IZRL. I was gonna
Okay.
pull it up.
Yeah.
Glad you mentioned it. And you can see that this one is clearly a winner over longer time frames. I could even fib it out for you. I'm not sure which level to use here. I think this could make sense. I think this also could make sense right here. Either way, this one has been in a pretty massive primary uptrend relative to the broader Israel equity market. This one has rallied like 400% in the last 2 years. So this one's been a major outperformer. But it's not looking so good now. Here it is. Let's fib it out first and foremost. I think I want to use a line chart.
You're coming into the 200-day moving average on it. I mean, not that you want to lean on it as support, but still very strong uptrend. You know, I mean, the fact that it could correct what is it, 30% still be above a rising 200-day. Whoa.
Yeah, that just speaks to the underlying uptrend,
Right.
for sure. And you have some type of bullish momentum divergence going on here. So momentum peaked or troughed on February 25th, and then you made a new low here on March 4th, and then here you are, still making new lows today, while the momentum is hanging right at that 30 level. So that could be kind of cute, but nonetheless, you can see that this downtrend is losing momentum. I think this is a pretty clean level to trade against. This 17 and a
Yeah, I
quarter.
was gonna say that's 17, man. I mean, you have the 200 day and the 61 point or the 161 and 8 extension right there at 17.
Yeah,
I
I
don't know if you
love the
can own it below there.
confluence for sure. So yeah, this is a key extension level. A lot of moving averages there, and you have this price memory. You could see the market clearly respected this one back
True.
last fall. Um,
It
Failed
was
there, and then
resistance.
it eventually turned it into support right
Yeah.
after the election here in the U.S. It went on to hit another extension level once it cleared that. So yeah, I think this makes a lot of sense to get long above 17 and a quarter. Maybe you put on a third of your position, something like that, and then you finish it off on a close above this 21. The VWAP anchored to the all-time high, and I think you're ultimately taking this one to the next extension level. So very
Oh, you know
short-term
what?
target
I'm
is
sorry. There were
25 and a
some.
half, and then you're looking
He
at
said
39.
he said he's long from 22 um since 1933. Oh, okay. Ran up to 26 but flipped. Yeah. But I mean, pretty clean levels you laid out there, right?
Definitely. Yeah. I like this a lot. And I just like the
Yeah.
whole Israel theme. Like, it's been it's taken it on the chin recently, but man, has this been a fabulous trend reversal here in the ARC Israel.
Yeah.
And if you look at
It's
ARC, the United States ARC, you can see that it's back in the penalty box. So
yeah.
that is some notable relative strength from Israel.
Yeah, for sure. Cellebrite too. Sounds like a biotech, but it's a software name.
Is it software for biotech?
Could be, could be. I'll have to look into that one.
Yeah,
We
they
got
do
one
some
more in the
crazy things
mailbag
over there in
here.
Israel too. Like I found a few weekends ago, I was just researching a bunch of Israeli tech stocks, and they have this company that kind of sounds like an Israeli version of Neuralink, the
Whoa.
the Elon Musk company.
Do you remember the ticker?
Hmm, no, I don't. I want to say
I'll ask ChatGPT what
it's
the
not this one.
Israeli Neuralink is.
Yeah.
But in the meantime, take a look at Well for me. Real estate
Well,
investment trust. 99 billion. Whoa. Healthcare
so
REITs. Oh, okay,
yeah,
nursing home REIT.
we could benchmark this to the S&P 500 real estate sector spider, and you can see that this one is an absolute beast. You have had a ton of outperformance here.
Yeah, I
Um,
think, and someone will have to double check me, but I think nursing home REITs have been kind of like the hot spot. I don't know if there's got to be some other ones in there too. Um,
no, they've definitely been really good. My uncle actually went into a nursing home a few years ago, and I was shocked at how much it was, Patrick. It was
oh
like
yeah,
10
oh yeah,
grand a month to stay at this place. I
oh yeah,
like, yeah, my jaw dropped when I saw that.
yeah. You'd
Uh,
think it'd be the Ritz-Carlton, right?
I know, right? And it like was not nice at all. Like it was very mediocre nursing home.
Yeah,
So
it's
yeah, it's a
expensive, man. Getting
fantastic
old
business.
expensive.
Yeah. Um, yeah, and this one is clearly a leader in that space. So that is definitely a trend I want to be involved in. So I'm glad we're talking about this. So here I'm fibbing out the range from this 2020 peak to the trough. That was a pretty nasty, quick drawdown. It was 74% in a matter of just a few months. So that's a fantastic place to fib out. And you can see the market has respected the first extension level. I think if you get a little throwback to that 136 level, that could be a ideal entry. If not, I think you're gonna have to get a little bit more tactical and use something like this pivot high right here, 150, 151 really. I think that could make sense. You could see the market ripped here. You had a God candle and you had a little bit of a correction. So this very tactically is some type of base. And here you are failing to hold the breakout from that base and you're back in the box. So if you get back above that 151 level, I think you could be long with an initial target of that next extension level, which comes in right around 204 and a half. A little $200 roll. How you doing? No, I like this one a lot. I think this is a notable momentum divergence here. You can see the momentum really peaked back in September of last year, right when we were approaching this first extension level. And here you are falling out of overbought conditions. You have a very similar story if you look at the daily RSI, but I think this one could be in for a bit more of a corrective wave. Maybe you do get that opportunity to buy at 136. I think that's the ideal entry.
So we're on to the chat here. So let's see your tickers here. Wavy wants to see DRD. DRD.
BRD.
DRD. Dave.
DRD.
Brian David.
DRD gold. Ayo.
Gold miner.
Yeah.
Dude, these gold miners, I mean, they failed enough times, right?
Yes, they have. Let's look at something like GDX. Here you are. You have a massive base, very similar to the gold futures, but a lot of relative weakness.
Gold's here, on its way to 3,000-ish, and this thing hasn't been able to make new, maybe new 52-week highs, but not, hasn't been able to close over that 2020 peak.
Right, and that's a lot of Newmont. Newmont is one of the largest gold mining stocks, so by definition, it takes up a lot of room in these gold mining ETFs. But Newmont has just been terrible, awful. It's gone absolutely nowhere since this 1987 peak. So that is really weighing down on those gold ETFs. But let's look at DRD relative to GDX.
Man, I still remember that day that Newmont broke over those 80, whatever it was, the 1980s peak. It broke above it for like a couple days back in, I think it was 2020 or 21. And then,
there's a lot of bag holders left there from 1987, Patrick. Believe it or not. There's a reason we look at those levels, So here we're looking at DRD weekly candlesticks, and we have a VWAP dropped from this May 2023 peak. That is a key level, and I'm also going to drop one from the 2020 peak, and you can see that both of those came in right around that 9.5 level. So that really, in my opinion, was the place to get involved. But if you didn't, I think you could take another swing at a potential breakout above 13. You can see that 13 has been a very important level for DRD. I would imagine there are some bag holders there still. So if you can close above that and prove that those bag holders have been taken care of, then I think the path of least resistance will shift towards that 18 level. But you can see
are we above those? Like if it closed here?
No, you're below it for now. But it very easily could close there today or tomorrow or sometime very soon. But you can see just how important this has been. It was support back in 2020. Quickly.
Yeah, and I guess we're looking at a weekly, so tomorrow is going to be the most important, right? Like where it ends the week.
For sure. Yeah, I can't think of anything more bullish than a weekly close above 13 for the DRD.
There you go.
That would open up about 30% upside.
It doesn't look like much on the chart there, but I'll take it.
Yeah, this is pretty sweet. Was this Wavies? Is that what you said?
Yes, sir.
Wow, Wavy. Great eye. And let's see if
Always
there's
bringing us these names we aren't familiar with.
and check this out, Patrick. That 61.8 retracement of this prior
No
drawdown
way.
lines up perfectly with that. Um, so this just makes a lot of sense. That 13 level is a huge one. So shout out Wavy for bringing this one along. Great chart.
Yeah. And I know we don't love diagonal trend lines here, but I will say I like that trend line from the lows there. It's got this kind of like ascending triangle formation kind of with that 13 resistance level.
This is what you're talking about here.
Yeah, I'm a big fan of the ascending triangle because what it's showing is basically you have a horizontal resistance level, and every time it gets rejected there, that uptrend line is telling you that buyers are getting a little more aggressive, even though it's getting rejected. Each time it does, they're getting a little bit more aggressive because they're not, it's not making a new low. It's making higher lows on the way
For
up.
sure. And like the resolutions of these patterns, it's just the essence of the pattern is it's a spring coiled up super tight, and then whenever it releases and resolves higher, I mean, holy shit, those can be
Right.
powerful. You just get straight up a few god candles. If we've seen it time and time again on the charts. So
Yeah.
really glad you brought
Yeah.
that up.
Yeah, no, that's a huge part of that pattern, right? The range contraction, yeah. So we got a few more in the chat here. Chris here is asking about Matador. He said we looked at it last week and it's taken a dive with the rest of the energy sector. What are some levels to watch here on the Matador? Looks like it's pretty much at the lower end of that range, right?
Yeah, man. Yeah, I think you could take a swing at it at this 42 level. That's where the market showed up and supported the stock in July 2022. You saw it again in March and May of 2023. So that would make a lot of sense to see buyers step back in at that level. But if
Right.
they don't, I think you could end up getting a little failed breakdown. We'd be marking this up like a top, and potentially that would open up further downside to this 35 level. And I am not convinced it would break that level. I think that would need a significant breakdown in the crude oil market, which is very possible at this point. Here's crude oil futures. You were just talking about that ascending triangle pattern.
There we
Here you
go.
have a descending triangle.
Right. And it's exactly the opposite of what I was describing, right? You have a support level that's supporting the thing, but every time it rallies, those sellers are getting more aggressive, right? They're getting less bullish. They're
The
willing
sellers
to
are getting more aggressive.
lower
No, you
prices.
phrased that right.
Right. Yeah.
Yeah, so like I think Matador could close below that 35 level if crude oil is resolving this top and it's trading down towards 50. I think we need to see it.
So that's your level?
For the
35?
for the crude oil
For Matador.
for Matador. Let's see. So that first level is 42, and then 35 is the shelf of former highs from 2018.
I see.
I think that's a big one.
42. Right.
Yeah.
Yeah. I mean, it looks like this thing's just in a very well-defined range for the last, I mean, ever since crude oil kind of peaked, it's just been in this range between 72 and 42, right?
For sure. And last week we were here talking about this and how much of a beast this one is. So this one, off the 2020 low, it rallied 6,500% to that late 2022 peak. And you also note that a lot of energy stocks peaked earlier in 2022. This one actually peaked in late 2022, which just speaks once again to the underlying strength of this stock. So if energy is gonna work, like this is the place to be. But energy just sucks right
I
now.
think crude is such an important part of this one. So what do you think of crude? I mean, it is here flirting with these multi-year lows. Do you think it goes down? You think I know you look at commodities and the energy sector pretty closely, so you have any thoughts there?
Yeah, man. Like you said, this is a pretty textbook descending triangle pattern. I've seen these work 1,000 times, so it would make a lot of sense for this to break down, in my opinion. Plus, you have very powerful entities like the United States government. They're very, very, very motivated to break this thing down to new lows. So that's not really a trend I want to fight. If this one can uh, break above this descending line here.
And
Uh,
Sam, you see that little false break out of that diagonal trend line? I mean, that's a very well-defined trend line. And I mean, regardless of what you think about it, that's a clear false move. And I think that could be the false move that gets you the breakdown finally, because it has just refused to break that, what do you call it, 60. I know it's kind of a thick area. It's kind of like, what, 65 to 70-ish? Or
on this, I'm looking at the CL2. So this is the second month. Because the front month, the chart is broken forever because it went negative
yeah.
in 2020.
Okay, so is that how you get around that? Because
Yeah, I use the second month. So
yeah,
CL2.
it's so hard, man. That's a good workaround.
Yeah, no, it is, for sure. So on this contract, it's like 61 and a half to 67 is the range. So yeah, right now we're at 66, pretty much on the nose. So we are testing the lower bounds, and like you said, this candlestick from the beginning of 2025 very well could have been the catalyst to spark downside resolution. And you can see that since we had that disgusting, awful, terrible candlestick, we've had, let's count how many weeks. It's been 6 consecutive weeks of lower weekly closes. So there is a lot of selling pressure in the crude oil market right now. This is not something I want to be involved in at the moment. I think there will be a time to buy energy stocks again, but not today.
So that's such an important chart too.
For sure.
I want to move on to another one here. This one doesn't meet our billion market cap threshold. We like to only look at stocks over $1 billion market cap on the show, but I think we can look at it because it's right there. It's 924 million, and it's a good looking chart. So let's look at EverQuote. And this one comes from Mr. Zerby. Thank you for bringing it.
What's the ticker?
Ever. EVER, yeah. Operates an online insurance marketplace connecting consumers with insurance providers. It offers car, home, and life insurance. Okay. So it's
Cool.
like
I see you, Mr. Zerby. And what is that? I think it's Root.
Was it Root? I remember looking at that one, yeah.
Yeah, so Root is also in the insurance business.
Yeah,
This was,
what a chart that was, right? And I think short
yeah,
interest was like ridiculous on that one.
yeah, absolutely. This one has been one of the best stocks in the market. It's up with like 4,000% from its bear market low back in March 2023. So that just goes to show that you're fishing in the right pond, Mr. Zerby. This had a nice little double bottom.
You reminded me of another one too. That Dave. I think Dave.
Dave's more of like fintech, but
okay.
nonetheless, an absolute beast of a
Yeah,
stock.
it had a very similar base back in like November, to what Ever looks like now.
For sure, Patrick. That double bottom from October 2022 to August 2023, a lot of these stocks had that pattern. Absolutely skyrocketed higher. This one has completed, I think you can call this a Kardashian bottom too. This is just checking a lot of boxes.
Would you call this one a not a zero?
Butt cheek, right butt cheek here, turning it into support now.
Would you call this a not a zero pattern? And do you want to talk about the not a zero pattern for those who for the uninitiated?
This is pretty close. Not quite. So For it to be a not a zero pattern, I would want to see it get to this level. So this was the IPO level, and it just immediately dumped, and then the buyers first stepped up at this 420 level. So if price got there and then slipped below it,
Oh, okay.
and then the buyers came back and ripped it higher, then it would be a not a zero pattern.
I
And
see. So this one didn't get
that's
beaten up as much as we'd like to see for it to be not a zero.
for sure. Nonetheless, that's very technical, and this one is it checks a lot of boxes for me still.
Yeah.
Like the Kardashian bottom is pretty sweet. I like to
And
see
Sam,
that.
the top end of that little base there, that's the 38.2 of that whole decline.
You know, Patrick, the more I look at this, the more I like it.
Yeah.
It's just so damn clean. Not a lot of
Sam, it's
charts are this
been
clean.
been kind of a crappy week for the market, but we got some nice setups on this episode, right?
Absolutely. This is my chart of the day. Shout out, Mr. Zerby. This is a beast. And we can
You got
benchmark this
5% short interest. Nothing great, but you don't need it.
for sure. And you can see here it is in absolute terms relative to the S&P 500. It has not resolved that basing pattern yet, but it's right there. It could happen next week. For all we know, it's pretty sweet looking setup there. So that's the relative trend that you're looking at there, but in absolute terms, I think you can look to buy this one on strength above that 27.5 level. You could also buy any weakness towards this VWAP anchored to the all-time high, which comes in right around 20.25 right now. Upside targets, I'm looking at the 61.8 retracement of this prior drawdown, which was pretty severe. It was about a 92% drawdown. So I expect the market to respect this retracement level. You can see that this 38.2 retracement level has been respected. So I see no reason for this 61.8 to not be respected. 41.25 is the first target, and I think this one ultimately ends up at 63 or 64. I love
So
this.
Carter here in the chat, he asked about a couple tickers here. I'll just rattle them off. You pick whichever one you want. CQQQ, China Tech,
We just looked at that.
Scalar, ZS, CNM, not sure what that one is, and Grab.
Let's look at Grab. So this is the DoorDash of what? Vietnam? Southeast Asia?
Southeast Asia? I'm not sure.
From Singapore.
Okay.
But I think it's pretty much the
But they
DoorDash.
do, yeah, it says Cambodia, Indonesia, Malaysia, Myanmar, Philippines, Singapore, Thailand, Vietnam.
And it's $18.25 billion in market cap, so it's nothing to sneeze at. So this is what I would compare it to is the DoorDash, which you can see is running into a pretty significant shelf of former highs. It's not quite there yet, but I think you could anticipate some sellers there at the 250 level. I think this ultimately could turn into some type of inverted head and shoulders pattern where you get the left shoulder here, big head right here, and then this took, let's see, January 21. It took about 11 months to carve out this shoulder. So once we get back here, which could happen, I don't know, at this rate, I'm looking at like May 2025, potentially hitting that 250 level, and then May 2026, this thing ultimately breaks out. So that's what you're looking at from a high level in this food delivery business. But you have a little bit of a different setup here in the Grab. You had a pretty textbook trend reversal here, which resolved back in late 2024, right around the election here in the United States. And we can drop several WAPs here. Just to reiterate the importance of that level. This was a huge level. It was resistance on numerous occasions. Um, Once they broke out around the election, it was really off to the races, and here you are. There's just been a consolidation, gross sideways action, but I think this one ultimately gets going again. And let's go back to the weekly chart just for a target. I think this retracement level is going to be a big one. That comes in right around 8.25. So that is the first target in my opinion. So how we trade it in the very short term, I'm looking at this VWAP from the November 21 peak. You can see the market's just been whipsawing around that. I think you could also drop some type of Fibonacci retracement level. It's obviously just a gross mess, but these are your levels of interest to get involved. And it looks like the market's kind of saying that $5 level's a big one. So I would get involved on a close above 5, potentially.
Yeah. Yeah. So we got only about 3 more to try to hit to in the chat here. Let's just try to hit them real quick. Goldman Sachs, TEM, that Tempest AI one, and then Google. But I'll repeat those in a sec. But let's start with Goldman Sachs.
So yeah, the Goldman is selling off. Also, Patrick, check out this weekly setup on the XLF. I tweeted this one out last night. Engulfing the last 6 weekly candlesticks on the XLF. That's no bueno.
That's the weekly, huh?
Yeah.
Yeah.
So,
and I will say, man, financials, man, they've been such a leader. If you look at that relative chart, that the XLF SPY is coming into a pretty big resistance level there.
For sure. Let's look at that. So here's what you're talking about. This is U.S. financial sector relative to the S&P 500.
Yeah, and that engulfing chart you just showed, what was that? That was Goldman Absolute?
No, that's the XLF in absolute terms.
Oh, wow.
Yeah, pretty gross.
Yeah.
So
especially on a weekly too. Ooh.
Yeah, it's very significant, and you can see that Goldman's pretty gross too. Yeah,
49 was the fib target for the XLF on an absolute basis, and it overshot it. But here we are kind of testing it now as support from above.
Yeah, financials have been a great place to be, but I definitely see some positions being unwound there in the very short term. So let's see.
Ooh, weekly RSI didn't even confirm that all-time high last week.
Yeah. Are you talking about Goldman?
XLF, sorry. I know I keep jumping.
Yeah, dude. Yeah. So there's been a pretty nasty divergence there on the XLF, and that's also been in place for something like the S&P 500. A lot of momentum peaked back in the spring of 2024, and we're really starting to roll over.
When was the last time we had an overbought reading? It was December?
Yeah, it looks like July 2024 on the weekly chart of the S&P 500.
Oh yeah. Wow. And that's when semis peaked. I mean, that's when a lot of
Then you got the August 5th capitulation low, but still, it was not bull market behavior to see that much selling pressure. So Goldman, I want to stay away from this for the foreseeable future. I think this 263, 264 level, that Fibonacci extension level from this the last cycle, that's a big one. You can see this 161.8 retracement took a long time to clear, so it would make an awful lot of sense for price to just turn around in a big mess here for some time in the Goldman Sachs.
Yeah, maybe just kind of range between those two fibs, right?
Yeah.
And you you're breaking a trend line that's been in place since the October lows there. Pretty valid trend line there. So
Yeah, good eye, Patrick. That's super clean. If you're into shorting based on a trend line break, then have at it. But that's
well,
not
I
really
mean,
for me,
it kind of just adds to the fact that this thing is just, losing every line of defense that it has.
for sure. Lowest weekly RSI since this trend line began back in early or late October 2023. So yeah, not looking great for the Goldman Sachs.
Should we, all right, let's hit up TEM and then Google, and we'll do our favorite charts. And then, yeah.
Wow, this looks really bad. Um,
This is the Nancy Pelosi one. Remember, she disclosed or came out that she had bought some calls on this one, and then it shot up like 50% the next day or something.
yeah, so this is what you're talking about right here.
Yep.
Yeah, so from the
Nobody had heard of
close,
this thing before that, pretty much.
yeah, so since Nancy Pelosi disclosed it, this one rallied 160%. And let's count the days too. So it did 160% and 19 trading sessions. That's the Pelosi effect.
Pelosi rally.
Must be nice to be able to move markets like that, you know? I don't think I'm moving markets coming on here on Chart Request Live, but maybe one
Never know,
day.
man. You never know.
Oh no, that's funny. So this was a very critical level of former resistance. This $80. You broke above there and quickly failed. This looks really gross, and honestly, I think the initial target is this 31 or 32 level. If this is in fact a failed breakout, price should come back to around here. So this looks really awful. This isn't anything I would touch. Yeah.
Yeah.
Shout out Nancy Pelosi though.
I failed breakout's all I need to see.
Yeah. And it's the same story here for the Google, Patrick.
Cool.
You had a shelf of
One
former
step ahead of
highs
me.
from last summer. You got there late winter 2024. You peaked back on February 4th, and here you are completely falling apart. This one reported mixed results on February 4th, and it fell about 7%. And since then, it has just kept bleeding lower.
Yeah,
And
never
honestly,
touched that gap.
yeah, man, this looks really bad. So we were just talking about if the Tempest, if it was in fact a failed breakout, price should go back to this 150 level, which coincides with the prior cycle's peak. And I think buyers will show up there, but for now, that seems to be the path of least resistance for the Google. And that's not a great thing for the broader markets. You know, this one's a $2.1 trillion stock. This is a big deal. And on that note, $3 trillion, Microsoft Corporation, right here at the lower bounds of a pretty well-defined distribution pattern. So this is like what the best tech companies in the United States look like right now. Is this like this is more of something I want to sell than think about buying. So this is not bull market behavior for technology in the United States. Yeah.
Well, Sam, we did see some nice looking charts here. So what was your favorite? Any stand out to you?
Mr. Zerby's. I think it was Ever.
Yeah,
This
EverQuote.
is definitely my favorite. Shout out, Mr. Zerby. EverQuote looks fantastic. Super well defined. Kardashian bottom. This is a thing of beauty. What about you, Patrick?
I like that one a lot. Yeah, I think that one is a really
it's
good
tough
one.
to beat this. This is like chart porn right here.
Yeah. I think that CLBT that Jonathan brought, I think that's at an interesting place here. And I just like that the levels are just so cleanly defined. That's 17. I
For
think
sure.
even better if you see like a little whipsaw below it because it's so clean. But
And
um,
Jewish tech is so hot right now, you know?
yeah, yeah, it's and exactly right. Like we were just talking about how U.S. tech is struggling here. So if you want the tech exposure, I think you go China, you go Israel, things like that.
For sure. I couldn't agree with you more.
Good stuff. Well, Sam, we'll do it again on Monday, yeah?
For sure. This is a lot of fun. Any plans for the weekend, Patrick?
No big plans, no big plans. Catching up on some rest, looking at some charts, you know.
Right on.
What about you?
Yeah, nothing for me. I'm just looking forward to March Madness.
There we
Coming up
go.
here very, very shortly. Very excited for it. It's gonna be a great weekend of basketball.
That's right. Yeah. Yeah. All right. Well, thank you guys so much for watching. We'll see you again on Monday.
Later, everybody.